So hi everyone, in this video we are going to be looking at a bullish kicker, or what we call the bullish professional gap, and it is what you're seeing on your screen right here. It's what we call the bullish kicker. Its opposite is the bearish kicker, and is what you're seeing right here, and this is the professional gap we are talking about. So this video explains everything you need to know about the kickers. Okay, so we are going to be looking at kickers, and we shall be studying everything you need to know about the kickers. Okay, so a bullish kicker, and then a kicker is a signal also known as a professional gap, and it occurs when the following conditions are met. Okay. So the first condition is that the price is supposed to be in a trend. Okay. Or for example, a downtrend or an uptrend. And we all studied in previous videos that an uptrend is signified by a series of higher highs and higher lows. And then a downtrend looks something like that. Okay. So what happens in the market is that we have a clear trend, and then suddenly a gap appears within that market. Okay. And then it defines that this price, for example, the price of one candle is not equal to the close price of the candle that precedes it. And therefore, a gap in a price movement, and a gap is the opposite direction of the trend. So what we are saying is that you have a clear uptrend, for example, in the, and then in this uptrend, you get a gap down, which is the gap is supposed to be in opposite of the current trend. So you get a gap which is going down. For example, okay. So for example, if you have a clear downtrend, because right now we are looking at a bullish kicker, okay, and the price rate here is at maybe $10. And then on the following day, the price does not open at $10, but it opens at, let me say, $12. So this creates a gap between this 12 and, oh, sorry. Okay, it creates a gap between this 10 and this 12. So it shows that there is a gap between 10 and 10 of 2. So instead of opening at 10, it opens at 10, at 12, which shows that we are going to be going upwards, like here. So for example, here, if the price is closing here, okay, at around $10, and then the following day it opens up here at $12, instead of opening right away from here to create something like a candle starting from this price, and then it starts from this upper price here, it shows that there is a gap, and that gap is what we call the bullish professional gap. Okay, so for example, if the price fell down from 10 to 3, and then the next day it opens at 5, it would create what we call the bullish kicker. So we are saying that, for example, we have a clear downtrend like this, and here the price is at $3, and then right here the price came from $10. And the following day, instead of opening at this $3, the price opens at around $5. Okay, so here we expect that the price is going to keep moving upwards, and that is what we call a bullish kicker. So a kicker is a very powerful signal that a trend is reversing, and it is often interpreted as a sign that professional investors have quickly realized that the trend is over and they are looking to get out. Okay, so as such, it is a strong signal that shows a rapid reversal of the trend which was in force. Okay, so once again, to recap, we are saying that in a bullish kicker, you can see that the price is in a clear downtrend. Okay, and then within this clear downtrend, for example, the price started to drop from $10, and down here it reaches something like $8. So where the price closed at $8, instead of starting at the exact $10, what happens is that this price is going to open at a price higher than $8. Let me say $9. So it creates a gap of 1. So this gap is what we call a professional gap. Okay, and when this gap occurs, it shows that the price or the trend has stopped, and then we are looking to reverse from that trend into a new trend. So that is what we call a bullish kicker. So this gap here is what we call a bullish kicker, or a bullish professional gap. Okay, it shows that the trend, which is a downtrend, is now weakened, by professional investors getting out of this trend, and therefore we look at getting a reversal. Okay, let's continue. So on this chart, for example, we can explain a bullish kicker very well. So you can see here that the price is in a clear downtrend. So here we got a gap down, though. So this is not a kicker because it is in the direction of the trend. But in kickers, the gap is in the opposite direction of the trend. Okay, so this is not a kicker because it is in the direction of the trend. Price fell from here to here. So the price is following the trend. That is not a kicker. Okay. So you can see that here we have a clear downtrend. Okay. And then the price closed from here on this candle. And then when you look at the open, this candle, which is next, the bullish candle, this one here, was supposed to start from here, from the close of the previous candle. But then it opens higher than the close of this previous candle. And this is what we call the professional gap right here. Okay, so the same thing happens, and then you can see that we got a retracement here, and then still here you can see that the price closed from here, but this candle here did not open at the same exact close of this previous bearish candle, and therefore this bullish candle opens slightly higher, and then we create this small gap, and that is what we call the bullish kicker. So you can look here and see that here, this candle here closed at a price which is low, and then this candle here opened slightly higher, but this is not a professional gap because it is in the direction of the trend. Okay, so here the best professional gap was supposed to be this one here, because one, we are in a downtrend, and then after this downtrend, we can see that this candle here opens higher than the close of this previous candle. Instead of opening at the close of this previous candle, it opens higher. Okay, and therefore we got a change in trend. So number one, the trend is supposed to be formed. That is the characteristic number one. And then number two, the gap comes in the opposite direction of the trend. So for example, if here we have $8 and then it opens at $6, it means there is a gap of 2. So the gap is in opposite direction of this downtrend, and therefore we expect a new uptrend. So let us look onto the entry points and the exit points of these kickers. So for example, now when you look at this chart, this is AUSJPY, and this is our time frame right here. This is AUSJPY on the hourly time frame. We can see that right here we have a clear downtrend. Okay, and then here we got a price getting stuck a little. So you can see that the close of this candle is not the open of this candle. So literally, in literal conversion, the close of one candle becomes the open of the other candle which is coming. Okay, and then here you create the bullish one. So if the candle, for example, you can see here, there's a bearish candle. It closed from here, and then this one opened from here and continued down. Then this one opened from where this one stopped and then continued down. And the same happens in bulls. Here, the price closed higher, and then this one starts from this low, from this previous high, and then creates a new high. Previous high creates a new high. Okay, so those ones, they create the uptrend. But you can see that right here on this small candle here, okay, you can see that this candle here, the bearish candle, it closed low. Then this candle opened at the same close of this previous candle, and then it closed slightly higher. Okay, after closing slightly higher, we expected that this candle here would open at the close of this tiny bullish candle. But what happened, it created a small gap, and then it opened slightly higher. After opening slightly higher, it creates what we call the bullish kicker or the bullish professional gap. So this gap here is a great signal for us that the trend is going to change. So what do we do? After seeing the gap, you don't buy the market there and then because you formed a bullish kicker. No, what you do is that you wait for a bullish confirmation candle, a strong bullish candle, because after getting the gap, we can still continue in our trend irrespective of the gap. So what happens is that they wait for this clear bullish candle. After there, we can make our entry. from this candle here, okay? And then put our stop loss at 1.5 of the ATR or below the kicker, and then we can be able to catch the wave up. You don't buy at the market price, but what you do is that you can you can you can create here a what we call the buy stop order, and then you wait to capture some profits. So that is it. When you get a bullish kicker, for example, price opens slightly higher here, it creates a gap. You wait for a bullish confirmation candle. After the bullish confirmation candle, then you enter a buy stop order and catch the wave up. So that is the bullish kicker. And thank you so much for watching this video. I'll see you in the next video. Do not forget to subscribe to the channel for support and for more videos like this. So thank you so much. My name is Jordan.